So we have a trade alert, by the way, as we move to the markets and things that are moving today and things that are certainly of interest to us on the desk, and I know will be to you. You sold Uber.
Personally, I sold Uber.
Why?
Clarity. I wanted the clarity of not having to worry about it in both places, the ETF and personally. Now, I said the other day I wasn't going to sell Netflix because that stock is on the decline. Uber looks a lot different. I've done very well with it personally. Uber right now is trading in a range between $80 and $100. The reason that I sold it this morning is because it appears to me, once again, it bumped up against the ceiling in the low 90s and it retreated back down again. So I don't, over the next couple of days, where I think there's so many other opportunities and important things to be paying attention to in the market, need to be looking at Uber and seeing if it breaks down below 80. I own it in the ETF. I have enough of it there. I don't have to wait for the break below 80. I just got out of it personally.
You use the word, I don't have to worry about it personally. You're worried about it?
Yeah, I think that last move up to 92 and the swift reaction to where that was resistance and now we're pushing back towards 80. There's only so many times you could press against what is apparent support before it pierces through. And I'm concerned that this potentially could be a moment where that occurs. And I've said that's where I wanted to get out personally.
You know, this was a great stock story, as you see on your chart through the beginning of the year, and then put it back to what you just had, guys, please. And then you had that sort of level off where it did nothing, and then you've had this retreat, which 10% down in 1 month, what is still a 40% up for year to date.
Yeah, and it's really reshaping the risk. I've owned this stock for the better part of the last 2 years. I still believe in it. We still have it in the ETF. It has strong momentum on a one-year basis. It meets all the characteristics that we identify for quality. But having it in both places, when I could see technically what I see in front of me, to your point, where it's had this very fast retreat, I'm concerned about that support level at $80 and breaking through.
Jenny, you own it.
Yeah, so we are worried about long-term competition from Waymo, but they just had Q3 bookings that were up 21%. Free cash flow yield still 6%. And I don't look at that 10% pullback as unique to Uber. I think that's a bigger picture. We saw it in NVIDIA. We saw we saw it in Palantir. We saw a bunch of these big tech stocks pull back. So I don't look at that as unique. I'm letting our position ride quite a bit longer.
You want to come back on that idea?
We have different,
because this feels like it's its own story. It's not, oh, it's just pulled back because some of these other names have pulled back too, so no big whoop. I mean, there are some questions that have been asked about the competition aspect, whether it's Waymo.
It's so long dated.
You have the Tesla questions that are out there too.
I just think those questions are really long term, and so for us, where we really set our lens at, if I buy this, I want to own it 3 to 5 years. That competition is still far out there, and a dip attempt, and it's really the fundamental difference between your strategy and mine.
It's a fundamental
right?
difference.
You can be reactionary, and we just muddle through it.
I'll tell you what. I mean, Deirdre Bose is joining us now because talk about timing. She has new numbers just crossing from Waymo, which would suggest to me that whatever you're going to tell us would be for the reason that the stock Uber has been sliding consistently throughout the morning. Let's show Uber. I'm going to put that up intraday again as you talk to us, Dee.
Yeah, please do, because, I mean, one of the biggest existential questions for Uber and Lyft is, what do robotaxis do to the business? And you are correct. This news is regarding Waymo, the Alphabet subsidiary, just out with its 2025 year-end numbers. And the numbers are just really astounding. It tell you the scale at which Waymo is growing. So here it is. 14 million paid rides have been served in 2025 so far, on track for 20 million lifetime rides by year end. Like I said, it's scaling like crazy. Here's another metric, 1 million rides a month now. That's a tripling year over year. And they're targeting 1 million rides per week by the end of 2026. That is going to take share from the rideshares like Uber. There's also, I just want to mention, a safety claim, 10-fold reduction in serious injury or worse crashes versus human drivers, 20 plus new cities planned for 2026, including Tokyo and London. And, Scott, we just recently got freeway robotaxi rides here in the Bay Area, so they're planning that expansion across more cities in 2026. And I think that is an incredibly important point, because then we stop going from city to city basis. You're actually connecting this national network of robo-taxis in the future if you're able to unlock highways, which they have here.
The stock Uber's down almost 6%. Talk to us about, through the lens that you have, which is unique to the area in which you work and in which you live. I don't necessarily think people in other parts of the country understand how it feels ubiquitous almost that Waymo has become in that area. So when you report these kind of numbers that, you know, they've served these trips more than tripling 2024 numbers, I gather you're not surprised based on what you see with your own eyes there.
And what I've experienced and what my kids have experienced, and pretty much anyone who lives in San Francisco who has taken a rideshare has likely taken a Waymo as well. They are everywhere. And I think the most important thing to note about, you know, having it as an option in your city is that it goes very quickly from novelty to just normalcy. You get in one the first time, I remember the name of it. I remember where I took that trip, and, you know, you're sitting there saying, wow, I can't believe this is new technology. This is a new world. Very quickly, you're looking at your phone and you're kind of bored because it's just so normal. And every subsequent time you get in, it feels just as safe. And in many cases, personally, it feels safer than having a driver in an Uber or a Lyft. You don't know how long they've been driving, what time of the day it is. And that, I think, is the major thing, which you guys in the future will know in New York because they're testing on the New York streets.
Good luck with that. Dee, thank you very much. We appreciate you. And the timing couldn't be better, just consistent with the conversation we were having around Uber, which plays right into the story. Whether it had anything to do, it sounds like it did not, with your timing, but the stock's at the lows of the day, down 6%.
You also have to pay attention to sentiment and positioning as well on this company. The analyst community right now, 80% of the analyst community has a buy on it. The 12-month price target is 133. If it does break down further, I think you're going to see maybe some of those analysts go from a buy to a hold and see the price cuts lower.
Oh, the irony, right?
That's generally what happens as price moves
Sure
lower.
All right, we'll watch that one. It's a popular stock. We know that, and it is at the lows of the session.